Hello and hello. Welcome to Stock Review, ladies and gentlemen. And before we get started, I would like to, number one, um, recap what happened in the past couple weeks. Definitely. Um, Anyways, so I'm going to stop with the citing and everything else, and let's get to business here. Um, the future options will be called in March, meaning all contracts will be shorted because the contracts are short in March, and they'll start a new cycle. Um, the 15th, Friday, February, trading activity on the VIX and VVIX CBOE was 10,000 calls to 8,000 bids to sellers. The retail sector is fueling the market. There are no Fed issues on the horizon. As you can see, these are the finishing numbers on the 15th here. We're going to get into what all this means. But bottom line, a grand total of 3.44% for Friday the 16th, which is actually was the 15th. I'm going to go ahead and do some editing here like I always do, because really what's more important to me is the accuracy of the transcripts, my friends. That's what's important. That we can go back and see what we've done. The live show is just an opportunity to reach out to other traders and get a little bit more exposure, but we're always going to refer back to source. And source would be, for a lot of the people that watch my show, this is their only window into the market, and I didn't realize that, but now I'm sort of kind of realizing it. So maybe I should be a little bit more detailed than what I've been lately. And I'm not saying this is their only access to the market, because they don't have any assets in the market. You know, putting on the show, just putting these ideas, making transcripts. There's a lot of people that do appreciate that. But let's continue on. Saturday, February 10th, day 41, week 7, Operation Stock Review, 52-week horizons. All are up on Thursday, the 4th of January, 2018. That was when a new cycle started. As far as 52-week highs and lows go, where they reached and how low they reached, it's all in there, right? Let's get started. 25,883,25 a week prior. We're talking about the Dow Jones here. It was 25,106,33, a range of 776.92. That was the change. The rally on Friday pretty much peaked at 443.86. If you really subtract it, you know, it's 333.6. What does it mean? Pretty much, the Dow Jones was at least 59% on the downside of the market, Plus, it only rallied 1.74%. 2. Week prior, the S&P 500 was at 2,707,000.88. Now it is at, and that's volume, by the way, guys. Now it's at 2,775,060. Right, so 2,775,000.60 in volume, which is 67.72 point change, ending at 1.83%. What does all that equal? 0.1240 hundredths, or 0.1 and 200 or 240 hundredths. That's how we read that. Gain over the week. At this point, I hold nothing in the S&P. This is a timing issue. It's a matter of not only when to enter the S&P, but which stock to buy in the S&P. Indications, no volatility to speak of. As you know, in order for us to make money, we need to have volatility, and that's why I'm not in the S&P, because overall it moved very little compared to the NASDAQ and the Dow Jones. Number 4, we have another chart below it. Moving into the NASDAQ with low cap stocks, spreading a wide net was a good choice then and now. Meaning I'm holding my positions. And the point is this, is that the Dow Jones lagged prior week as we got a swing to the upside. Now you can expect the same thing to happen on the other side of the pendulum with NASDAQ. Its swing up will be lagged. S&P will follow last. So what you see here, and I will sort of kind of point this out in the second segment of part 2, is definitely Dow Jones outperformed everyone else, even though, as you see here, it's lower. That is a big misconception right there. The NASDAQ came from a lower position. So it actually had more volatility and more action than any of these markets, even though the Dow Jones numbers, they look impressive, they look big. The NASDAQ, or hold on, let me rephrase that. The NASDAQ was not as far down. Or, let me put this in perspective, what we're looking at here. The NASDAQ was further down, right? But what ended up happening was that it got into positive ground when the Dow Jones was already sort of kind of up. And that's the swing that happened during the week. Meaning the Dow Jones came from, let's go back. Dow Jones came, and the bottom indicator here, let me use the cursor, this right here, the bottom indicator there, the Dow Jones started off at the prior week at 63.20. That was the end of last Friday, not this Friday, not the 15th, but the prior Friday, which, let's go back here to check. 15 there, so I think it was, and by the way, it's week 8. I think it was the 8th, was on Friday. It went lower, did 63, and had to gain all that ground back. Finished 443 points, 0.86 points. It was only a gain of 1.74. So what does all this mean? It means the Dow Jones came from a higher point. It really, at the end of the day, it's moved a lot, and it did finish quite a bit higher on Friday, but it was a gradual build up throughout the week. It wasn't just it all happened on Friday. People may have taken profits on Friday. Unlike the NASDAQ, everything happened on Friday. Everything happened on Friday. And I wanted to get through this real quick so I can take you to some of the the charts. There's no live action right now. Sorry for a long explanation, but I really want to get it nailed down. Number 5, Sky Solar. I bought into Sky Solar, up 92.17%. And yes, I took profits in the middle of trading, reducing my market share by 50%. I doubt that it'll be able to rally to that point in the near future. And that was an opportunity I took. I spread a wide net in the NASDAQ, hoping to hit some volatility. And 92.17% on Sky Solar, it was at 102% when I sold 50% of my shares, which I'm still holding the other 50% because this was a long play for me that ended up panning out in 2 days. So already this strategy is paying off. I've never had a strategy pay off more quickly in my life. Going to low cap and penny stocks, reducing my unit cost share and increasing my unit shares. It's a much wider net. I'm way more agile. Plus, with having 45% of my overall power in the market in cash, so I can make those quick moves. Like I said, I'm really hunting for some opportunities in the S&P. No doubt. My other positions in the NASDAQ are MNGA, renewable gas. They operate plasma arc refineries. I'm calculating that it will do well in a bear or a bull if we see any substantial breakout pertaining to gas prices getting higher due to the weaker dollar. eBay, which is just a safe position to hold in the retail sector. AMRH, asset class banking, financial sector, cloud computing for banking and insurance companies, takes care of my financial. Once again, wide net in the NASDAQ, trying to cover my asset classes, and there you have it, results. And as you see here, this is my C Team SOG, and you see VIX, VVIX, DXY, BNDX, and oil. And I'm just going to totally read from what I have here. We should see VVIX and VIX battle back and forth as the month of March closes, with VIX making gains until the new cycle begins in the month of March. We have a beige book coming out as well. DXY is down, which is a total inflation of the market. BNDX is down in aftermarket, but was up during trading on Friday the 15th, which is a direct cause of the dollar being below 98. Commodities going up in price, especially energy. My A-Team SOG, and we'll review all this and look at the charts more in depth. It's the second phase of this report. ESNC, Amex. I went to Amex because I wanted to diversify even further. And NGD is a different market. These two positions in Amex is to further diversify my portfolio. Also, it is more attractive than the S&P. NGD is up 0.2500s in aftermarket trading and will be getting stronger with a weakening dollar. ESN does off-grid power development, which was long for me, and I'm happy to see positive results early on. UDN, bearish ETF, as expected, up as the market becomes inflated. 3.2, DRV reached its 52-week low, and I couldn't pass that up. When the real estate market should be down for the most part, but due to inflated market, it is up. And I'll be waiting for that bubble to burst, just like always. Standard operating procedure. Stay tuned for part 2. Hello and hello. Welcome to the second segment of
the website, and it's literally right. I am a forex day trader. Can the Institute's education help me?
Using inflation, right? As far as this particular strategy, I think I've taken it to its max, and I want to get into some other things. First and foremost, Winston-Salem and SunTrust are going to form a new bank. I'm getting in on this, and I'm letting you know this now. Definitely, banks are made. Big banks are made. They just don't happen. Every major bank that we know of today was formed during a crisis. So I'm going to give you a heads up. Winston-Salem and SunTrust want to form a new bank, and this will be a topic in future reports.
What mistake has that person made?
But as far as our taking advantage of
and they don't have any ability to trade
inflation segment, part 2, I wanted to give you guys a better look at things.
The first 1 to 2 years as a retail trader is to learn how to trade everything and get yourself a proper educational foundation so you can follow the volatility or predict where it is and go where the money is. So if you're over one time horizon with one asset class,
from there I'm going to go into deep research, which is probably not appropriate for a show.
And the only way to do it is to emulate what professional traders do, and that's what they've done. So on the left-hand side, we've got pretty much all the behaviors of a professional trader, and on the right-hand side, all the behaviors of a retail trader. What's the approach of a professional trader? Systematic, mostly long-short portfolio management across multiple asset classes. No narrow definition. Every trader wishes they could have an infinite discretionary mandate. to be able to trade anything at any time in any way they wanted, so they can just follow where the money is. So this idea, the popularized perception of a trader as in, you see lots of guys screaming on the floor like in the movies, it doesn't exist anymore. It's complete nonsense. But there are people in the world that wish
below market right now.
it was the case. But it's all pretend.
On NGD. This is a long play for me. I'm not much worried about that.
Approach is 80% fundamental, 20% technical.
That's the MACD
In the vast
right
majority
here.
of cases, investment banks
KDJ right here. And it's showing
retail
sell
traders, what's the approach?
or buy. So,
What do retail traders
sorry.
tend to do when they approach the market? Short time frames.
I already hold a bunch of shares, so I'm really not going to do that. We'll just buy our time for that one.
Always look
NASDAQ is so volatile, I'm not even worried about it.
don't exist because they're not actually monitoring volatility correctly. What's the outlook of risk for a professional trader? This is where they differ as well. Investment bank, prop desks, and hedge funds will have multiple positions, long and short.
I love that 92%. Look.
The position sizes are 5 to 10% of portfolios.
Oh boy.
So you're looking
I hold all these particular stocks, so
and their trade correlation within the portfolio.
just going
And
over
not
this
one
stuff.
position will be allowed to blow them up.
Let's take a look.
That's why they have position limits like this. What's the retail trader approach?
It's totally sunk below
What happens when
market,
you open a typical retail trader account?
but we're talking after
Well, actually, a
hours.
very, very high percentage of retail traders don't have any position.
Look at that Sean White,
There's a massive
all
revenue
green
brokerage industry
mountain
that
right
gets access to try and solve it all the time, which is dormant accounts. Guys who go to seminars with brokers and educators, they get convinced to open a trading account, they deposit a couple of $1,000 or $10,000 or 25 grand. They go home and they realise they don't have the confidence to pull the trigger. Why? Because they realise that what they just learned is a load of nonsense. And then they leave their money there, no interest, and every month they pay inactivity fees to the broker. What does the broker want them to do? The broker wants them to trade, of course. What about the rest of the guys?
I still have the option to sell the other 50%
Open up
of the
their account,
shares
typically 2 or 3%.
right here. We'll see what happens
Their
Tuesday.
favourite forex pair,
I might just do that.
Short the S&P 500. Just read reading green space.
Buy it right back again when it hits its low.
Watching too many YouTube videos. And usually their favourite cheap stock, which they bought 2 years ago, it's now down 50%. And they're moving it over to their pension because they can't bring themselves to sell it. That's typical retail trader account. Think of all those mistakes. They're really, really common. Professional traders don't do that. It's all about portfolio management and getting consistency in return, which is the next point. With pro traders, consistency means risk-adjusted returns. Risk-adjusted returns. What does that mean? Let's think about
I'm gonna
this
check
with
something
two traders
out.
as an example. Trader 1. And let's say you're pitched to invest money with either of these traders. Trader 1 takes 50%
See how Renminbi is doing right now.
annualized volatility in their
Interested
portfolio.
in
And
what
measure the
Renminbi is
volatility
doing now.
very easy. 50% risk a year
Definitely.
and gets 25% return. And trader 2 takes 10% of risk a year and makes 16% return. Who's the better trader? Of course. Trader 1, you can't invest in. So whatever you put with trader 1, he could blow up literally in 6 months. And your investment is zero. With the other guy, he could lose 10% in a year. But he's knocking in 16%. His return is higher than the volatility of the portfolio. He's an efficient, optimized trader.
Just to wrap up the show right now.
Are literally employed to do that. So they will have a volatility cap on their portfolio that they can't go over.
I have not
They're
abandoned
mandated to take the
what I was doing.
They're mandated indicators.
I have added on,
10% risk. That's
and
why they're
from there,
so
the sky's the limit.
Because they're signing up to
Definitely adding on new strategies, different concepts, different ideas.
Everything short-term binary.
Totally.
So they'll have no positions or one or two positions. They'll sit around for 3 weeks waiting for the month.
It is the 18th. Happy President's Day. I appreciate you tuning in to Stock Review. These are the applications. These are the concepts. These are the IPOs. These are the ETFs. And once again, I don't hope this has been informational for you. I know it has been. Thank you for tuning in to Stock Review.